Hello.
Hi.
Hello. Yeah, let me try. Uh, let's see. Let me see whether I can I can do the sharing or not.
Okay, perfect.
Let me see. I don't know. Let me try it again. Um,
Did it work for you?
I'm trying. Can you see my screen?
Yes.
All right. It seems working. That's great.
Yeah, and then maybe just, yeah, if you can try hitting present and then see.
Yeah. I'll try to make it large. I'm trying to see you guys too. Oh, hold on. Let me do this.
Yeah, that's perfect.
The only thing is I won't see you guys.
I think that your audio might not be connected.
You can all see me?
I can hear you now. That's better. It says it's loading.
Can you hear me now?
Yes.
Okay. You can see my screen also?
Mm-hmm. Do you want to try clicking? Oh, well, now I can't see it.
You can all see my screen?
I can't see you now.
You can all see me?
No, maybe unshare it and then I can just do it.
Can you see me?
No, maybe it's something wrong with my computer.
Can anybody else see me?
Okay, I can see you now, but for some reason I can't see the screen.
Oh, you can all see. Yeah, I stopped sharing.
Okay, yeah. Okay, maybe let's try
Okay.
it again.
Should I try again?
Mm-hmm.
Can
Okay,
you see my
perfect.
screen?
Yes.
All right, great.
Do you want to try to click? Is there like a present button maybe? Yes, that's perfect. And then we can wait a few minutes for a few more people
Sure.
to join.
Can you still see my screen?
Yes.
Okay. That's great.
Okay, maybe we'll wait like 2 more minutes and then I think we can get started.
Okay. Should we get started?
Yes, perfect. So thank you guys so much for joining tonight's session, which will be on consumer finance and credit, super important skills that everyone should know, especially when we're leaving high school. And we're so lucky to have an amazing speaker. And we're going to follow the same format as normal. So a presentation followed by a Q&A at the end. And if you have a question during, you can always stop and feel free to turn on your mic and camera. But I think with that, we're ready to begin.
Hi, let me first introduce myself. I'm very happy to be here, talk about consumer finance and credit world. So let me first introduce myself. My name is Julia Shen. My company is Synchrony Financial. I'm the Chief Credit Officer for the digital platform and also in charge of the credit BD, the new deal, and also the product. And I'm very honored to be here presenting this topic. This is really my whole career is about it. But before I talk about work, just want to mention my daughter, Chelsea Chen. She is currently the sixth grader at school. So she joined actually fifth grade, and she's very happy and very lucky to be part of the GA family. I think you guys, it's great to organize this type of forum and seminar, talk about credit, talk about any financial industry or any other topics. So feel free to ask me questions during my presentation. So I just want to give you, I don't know whether you guys familiar with credit card or whether you have seen your parents probably every day using credit card spending and purchase stuff for you guys. And I don't know whether you guys actually have a credit card attached to your parents' account or not. If you, I just want to see who have it or who not. Just if you can raise hand or maybe just tell me if that's possible. I just want to know whether you have some basic sense of credit card. Okay, it sounds like somebody already have access to your parents' card. That's great. Thank you for telling me. That's awesome. Yeah, so the reason I asked that question is, so my whole career is the whole consumer finance is a very big industry. It's part of the financing because a lot of people talk about finance industry. They always talk about investment banking, commercial, and they talk about like a, for example, the Wall Street type of jobs. But this one is actually a little bit different, but it's also part of the finance industry. So it's focused on consumer lending, credit lending. So we actually, my company is issue credit cards. So similar to Citi, Chase, I don't know what kind of credit card you may have with you see your parents use. So like a Visa, Master is a network, but there is always have a bank issue the consumer credit. It is important because if you, at some point you go to college, at some point you want to, credit is not just credit card. Getting a credit, you have to, if you want to get your student loan at some point of time, or you want to get your house mortgage, and in certain cases, if you rent a house, they want to check your credit history. So credit is very broad. So it's not just getting a credit card, but also could be any loan, or even demonstrate your credibility and the credit history. So it's a pretty big broad industry, and the important thing, the reason I want to talk about here is this actually require a strong mathematical skill sets and statistical skill sets. So if you're interested in this type of area is well fitting into this overall. If you want to learn, if you're naturally very really like math and statistics, this type of classes you probably learn a little bit already, probability, and this is going to be very very important skills to what we are doing for this consumer finance and lending business. Because what we are doing is we actually all those banks when they lend, they basically lending money to individuals, so so that this individual can get a certain dollars. You may not have enough cash. Let's say, let's take an example. You go to a GA store. There's a very nice bag you want to buy, but you don't have the cash at that moment. So it's a lot of time people use credit card and to spend and use. So that credit card, there's always a credit amount. So like how much you can, let's say the credit card have a 2,000 credit line. That means if you want to buy an item like a $500, you can buy it. But the question is, how do you exactly get that credit card? And how much a credit loan you can get and you can qualify to get? That's where the bank behind the scene using a lot of data, customer behavior, and determine that. Because at the end of the day, bank need to make sure this individual customer can pay back. So think about the dynamic. You have a consumer, you have a bank, and you have a merchant. Consumer want to, like you guys, individual want to go somewhere to buy stuff. Or maybe you want to get your car loan at some point in time. Or maybe you want to rent an apartment and people want to check your credit history. So you want to do something, you want to make sure you have a right credit, and the bank can issue those credit to you. And so how much amount and whether you qualify or not, that decision is called credit decision. And that decision behind the scene, leveraging historical credit, all the consumer data and behavior to really look at whether Julia, let's say whether, is more likely to pay back and whether have a capacity to pay back. So FICO score, I don't know whether you guys know about FICO score or not. This is a very important and a very traditional, basically a credit history factor, determination factor. Because FICO is essentially is a company, they develop a score. The score is actually determining whether Julia have a good credit history or not a good credit history. And the good credit history essentially is the likelihood that Julia will be paying back. Because when bank issue a credit card to you or issue a loan to you, they need to make sure you can pay back later on, whatever time frame you need to pay back. And that likelihood, whether you can pay back or not, that's calculated at the behind the scene. So it's determined based on your payment history, based on how long you have a credit card, and how much usage you spend on that. Generally, when you're starting, you may use your parents. That's actually a very good idea. So if you don't have credit card, I highly recommend that you can just be an auth user. So that's called authorized user to your parents' account. Why is it important? Because that can help you establish your credit history. So let's say I don't have credit, like you guys, you're very new and you're young and you don't have any credit history. So to establish that, you can say, I want to get a card on, my parents' auth user card. Because the moment you're doing that, you can actually build up your credit history. You can leverage your parents' credit history, and then can help you to get your first credit card. When you get applying a credit card, the banks actually, as I just mentioned, they actually evaluate your history, evaluate looking at a model that's actually a statistical probability model to predict whether this individual more likely to pay back or not, and whether could have a good history or not. That's the FICO score. So they pull some credit bureau, understand your credit history, your credit score, and based on that score, they can determine, maybe they initially give you a very small amount, $200, $500. When I first came to US 20 years ago, I don't have credit history at all. And I don't even have, my parents are still in China, I can't establish credit history. So the way I doing that, I just get some saving and checking to a bank, so they know I have a relationship with them. And then I basically apply a card. So that card, the initial card is very small amount, only $500 or $200, but I always pay back. So I start build up my credit history. Every month I pay back. I use my card. I demonstrate I can pay back. So then they later on giving me a higher credit amount. Why after years of experience with credit history, utilization, a lot of payment capacity you can demonstrate, the bureau can give you a better score. The higher the score, you can get a higher loan, and you can eventually buy a house when you have family. When you grow up, you can actually get a much better loan amount. So that's how you build up. And my company Synchrony is basically doing this type of lending business, and we, based on the customer behavior and data, determine who we should issue a credit and how much amount. So just want to give you that high level background about credit and consumer financing.
Hi, sorry to interrupt, but I think that there might be something going on with the audio on my end. It kind of sounds muffled. Are you hearing that?
Anybody else can hear me?
Wait, sorry, can you say that again?
Anybody can hear me?
Oh, this is better now when you are closer to the computer, I think.
Oh, okay.
Yeah, this is
So,
perfect.
oh, okay. Sorry about that.
Oh, that's okay.
Okay. All right. So I hope you get some of the idea about how, I just quick summary, right? So there's a consumer, there's a bank, and then there's a merchant. So sometimes you want to get a loan, you get a car, you want to buy something, but you have to make sure you have a sufficient amount, and the bank will give you a credit, issue a loan, and that's how they starting the relationship. And the bank, like us, we using your all kinds of customer data to determine whether this customer is good or bad, and whether can pay back from payment capacity perspective. And I also mentioned a little bit, as you guys, some suggestion how you can establish your credit history. So this is like a credit bureau, because credit bureau, as I mentioned, is all the like a TransUnion. I don't know, you have heard about some of those credit bureau. Those bureau, all the banks put in credit bureau. Credit bureau is established having all U.S. based consumer data. So they actually gathering all the information about individual, their payment history, how many cards, how they are using the card, all kinds of information. And using those information, they can calculate this individual's likelihood to pay a bank back and a credit score. And based on the credit score, each individual, eventually the bank can issue a loan and determine how much loan they can give this customer. So as I mentioned, like initially, when you are new to the credit world, or if you don't have any credit card or credit history, you only have with your parent, that's a good starting point. But it's important that you make sure you always pay back. You use all those information cumulative together. You can establish a good credit history. Any question? Can you guys hear me now better?
It's still a little bit muffled for some reason, but it's okay. I think we can just continue.
Okay. All right. So this is actually just give you an example about, we have a different bureau. The entire United States have a lot of credit bureau agency, and the most important three big one, the biggest one is Experian, Equifax, and TransUnion. So each of those contain a lot of millions of consumer data. So if you think about this whole consumer finance industry, is all about data. So if you're interested about mathematics, statistics, data, this is the right industry that you eventually want to get into, because this is the whole banks and the bureau, they study all the consumer behavior, how they spend at a monthly and daily basis, and how they utilize the card, how many cards. So based on those behavior, they can determine, like whether they should issue the certain lending a certain amount to each individual. Okay. So you can see here, this is just give you an example of a credit report. So initially you may not have a credit card, you only have your parents' one, but at some point you have your individual, your card, your own credit card. This credit bureau is going to show collecting all the information. And the important thing about, as I mentioned, right? So I don't know you. I just mentioned the FICO score is the score determine whether you have a good credit history or not. How they calculate that score is actually a likelihood, a probability of good or bad, whether you can pay back or not. And those determined factors is based on the information I outlined below, right? So how many cards, how much usage, how much credit line, the total usage. Like if you look at your parents, they may have multiple credit cards. They may not just have one credit card. They may have a lot of credit cards. They may also have other loans. They have car loan, mortgage, all those information collected by credit bureau. And the credit bureau have all those information. They can do all kinds of data pattern, understanding what kind of population more likely to pay back, what kind of population more likely to use the card. So those information are all very important. And the way you can get a credit card and submit your credit application. So if you're wondering, how can I get my first credit card? As I mentioned, you first need to establish some credit history. You can have your checking saving for a certain bank like Citi and Chase. So you can get some relationship with those banks, and they are more likely to issue a credit card to you. Or in a lot of cases, you go to a store. So for example, you go to Old Navy, or you maybe go to any store. Sometimes those store will issue, tell you, hey, we offer a credit card. You don't have to pay by cash. You can use our credit card to pay. And so you can go to the store and apply. And you have a phone. A lot of time we are using mobile phone now. So the phone also, when you walk into a store, sometimes you scan a code, and that UR code will go directly to application. The application you have to fill out your name, your social security, your address, your phone number, all those important information. And all those information will connect in behind the scene with credit bureau. I just mentioned all the credit bureaus. So all the banks collecting your information and grabbing the credit bureau and say, okay, Julia Shen applying a card. Let's see how Julia's behavior historically. Does Julia have a card? How long the credit history? How many cards Julia has? And then based on that information, you'll calculate the likelihood this Julia will pay back, and then they are going to issue the credit card. And I think for a lot of younger generation like you guys, you may not need a regular revolving credit card, like a regular credit card. You can also get some installment loan. You've probably heard about it, like you want to purchase a concert ticket, and it could be a little bit more expensive than your budget. You may not have cash, but they may offer sometime online, like even you go to PayPal, Venmo. Sometimes they offer like an option. Okay, you don't have to get a card, but credit card, but they can issue an installment loan in 6 weeks. You choose 4 times, make a payment. And so then you can pay back. You don't have to pay back now, but you can pay back in six weeks as an installment loan. That's another option that you can get some credit. So all those opportunities, when you apply, you get a card, and then you pay back. Those information will go back to credit bureau, establish your credit history. And sometimes you may get a mail. like that's more traditional way, like we call it pre-screening, but you get a mail, they say, hey, congratulations, you may qualify for a certain offer or credit offer. And that's another way to get a credit card or credit. And regardless which channel and how you pay, the bank behind the scene, as I mentioned, they determine whether you qualify for card and how much amount we should give. But the way we are doing this, all the bank, we're doing a lot of mathematical financial study about this individual, how much money we can make, and whether this customer will pay back, how much interest fee will charge, how much in other fees we can charge to the customer. That's how bank will make money, because bank will make money based on the fee and other revenue. Okay. I know I go probably pretty quickly. I can, given the time, I can pause a little bit and see whether you guys have any questions about, I just mentioned, I don't have to go through every single slide, because I think credit card industry, like my company, we actually have the GA girls, when they graduate, go to college, it's a couple of kids already in my company for the internship. And because we're hiring people who really like math, statistics, like data, doing data analysis, like finance, those are the typical majors that we really love to hire those people. I'll pause here and see like you guys have any questions. And because credit card, this page just show you credit card business has to be have a fair lending, so meaning everybody qualifies. So we don't look at, we're only based on your credit history. We are not looking at judge you based on race, color, other things, or gender, determine whether we give you credit. That's not law. Legally, it's totally illegal. And so it's a fair lending. It's very important for the credit card business.
I have a quick question. How many of the people that apply get the credit cards? Is it like a large percentage or a small percentage?
That's a wonderful question. Depends on the channel. As one of the slide I show you, there's a multiple channel you can start applying. Generally speaking, the approval rate roughly industry-wide, so for credit card, is like a 40-50%. Could be higher if you go to store. In certain cases, could be higher, but also depends on what kind of customer walk into. So if you think about it, if you go to let's say a very high-end store, sometimes the people go there, they want to shop there and spend money there. Generally speaking, they have a much better credit quality, credit profile, so that their credit score, FICO score, much higher, and that approval rate could be higher, could be 80% approval rate or 70% approval rate. So think about if you have 100 people, if those people have a very, very good credit score, of course the approval rate will be much higher. Mm-hmm. But if you, in certain cases, somehow they're tracking to not very good credit quality, the credit profile not very good, or maybe like you don't have much credit history. Sometimes the banks will be more careful about issuing a credit. The approval rate will be lower, could be 10%, could be 20% approval rate. But your first credit card is important because you want to make sure you establish, once you have your first credit card, then it's easy to build up your credit history because you can always on time paying and you always use your card. That will help you build up your credit history and your score will go up quickly.
Awesome, thank you.
Yeah, so I like data. So I've been in this industry for almost like 20 years. And over the years, I always doing data analytics, building models, building score, understanding customer base, and issue the right credit card and credit loan to the customer. So if you're interested in this type of data analysis, that's really the right industry you want to get into. And right now we focus on machine learning because it's big data, millions. billions of transactions and millions of data, you try to detect the customer behavior and pattern, build a model. So that's really cool skill sets to have. So sometimes the programming language we're using for our industry is like Python and SAS. Those are the very common data analysis programming language we are using. Any other questions? Any other area you want to understand about credit card, consumer financing?
Maybe if there's no other questions, we can just go back to the slides that we missed.
Sure. Yep. So this is what I want to show you. Like for as I mentioned, bank, when they're making a decision whether they want to issue this loan or not, is really based on a couple of things. Eventually, it's a risk return and profitability. This is very fundamental when you learn finance, and you have to learn risk return, because like generally speaking, if you don't want to take much risk, then the return and the revenue will be lower. If you want to take, so there's always risk return balance. That's how we make a decision. So high risk customer, they need a credit. So they maybe not have a much credit history, but they need credit. But they're more likely to default. They're not paying you back, could have higher losses. But at the same time, they may pay more fee and revenue. You could get more revenue. So at the end of the day, for credit industry, credit financing side, it's really important to determine risk return. How much money I can gain from revenue, how much losses. So revenue minus loss equal to profitability. That's the final determining factor. As a bank, they calculate that every day, determine each decision. So they try to optimize the revenue minus optimize profitability. That's always our goal. And this slide, I told you, like for this credit card, credit financing, consumer finance industry, it is very important to be regulated. We regulated by OCC, Fed, and it's very important to follow the law. Like cannot make illegal decisions. So those factors, as mentioned, this is just a small piece of that. There's a lot of regulation about credit card industry. I think this is almost the last slide. This is where you ask me the approval rate, which is a wonderful question, because the approval rate determine, when we issue a credit card, simply put it, if your FICO score above certain threshold, we'll give you a credit card. If you're below a certain score value, we will not give you a credit card. That's why I mentioned some high-end store, maybe the population there, they all have a higher score. So if you put a score cutoff, and let's say 640, your FICO score, above that, we're going to approve you. Below that, we're going to decline you. That's determine the approval rate. That's why I mentioned for the credit card industry, it's all about data, doing a lot of data, big data analysis. And so if you're interested and passionate about it, this is the right place, because you can study consumer spending behavior, payment behavior, and how they're utilizing the card. And that's a very, every day, I think you're going to learn a lot of those interesting pattern. And if you think about pandemic, people's customer behavior, shopping behavior changed quite a bit. They all go online now, not going to store. So all those behavior impacting the spend and usage, eventually impacting the credit card business. All right. Any other questions?
I have another question that's not directly related to this, but how did you know that you wanted to do like this specific realm of finance?
You mean like whether you want to be part of this industry, or is that your
Like, how
question?
did you know that this was like what you wanted to be doing? Like, was it because you liked math, or was there something that like pulled you toward this job?
Yeah, so actually, that's a very good why. At my major, I graduated from OSU, Ohio State University. So my major is econ at that point in time. So I learned quite a bit about, I mentioned earlier risk return, and also talk about like how you make a decision, any decision like a game theory. I learned quite a bit in the, study the math and the statistics. So those are very important for econ major. So in one of the case study I remember is talk about credit card industry, because you have to study the customer behavior. There's millions of transaction data. You can find out the pattern. So if you like this type of area, you can give it a try. Like my company, we have an internship. We also have that's the good place to try out. And when you get to a certain college, like especially for the latter part, or maybe even initially, you can start try, do some internship for consumer finance, or you can, hedge fund or some investment banking. That's one area, one industry. You can go there. It's all finance, but it's a little bit different. Consumer finance versus investment bank. You can try and see whether which one you like better. I highly recommend that. That's how I started. I think because you don't know whether you like the data, whether you every day you want to do some analysis, figure out, because it's interesting, because we want to see what kind of population we want to promote, what kind of card, and what population they are more likely to go shopping with certain retailers. Those kind of question is when you study how you make money, and as a bank, those are the things for consumer finance, which is very different from other seminar you probably went through for investment banking, those type of things. So I think I would say doing some internship, and that will help you to determine. And plus, if you like data a lot, that's definitely an area you can try.
Mhm. Someone asked a question in the chat saying, what are the best ways to build your credit if it is low? From Tatum.
Yeah. So if as I mentioned, right, first, if your parent have a credit card, ask them to add you as auth user, because by law, all the auth user, like I don't like my daughter. I'm at some point I'm going to give her a credit card, as add her as auth user. It's very easy for your parents to do so, and then once they do that, after a year period, you pretty much have a credit history. You're going to have a credit. The bureau going to have some information about you. And then I would recommend you put some money to a bank, have some saving or checking account, and then you can apply a credit card through that bank, like a Citi or Chase. That could be your first credit card. Once you have that, credit bureau will have all those information. The moment you have a card, credit bureau will start having information. Once you have a small amount, even $200, you use it regularly basis, and then you pay back on time. So they have a due date, payment due date. Make sure you always pay on time, never overdue. Because the moment you overdue, you mess up your credit history. But if you pay back consecutively every 6 months, your credit score will go up. You can always go to credit bureau to check your initial credit score may be low. Initially, it could be 600 or kind of low. But then when you start having your first credit card, and you pay always on time for 6 months, you're going to observe your score going to go up and up. And after 2 years, and your credit score will be stronger and better. After another 5 years, and you always pay on time, you are going to get a very good credit history. And then you can get your car loan, you can get your mortgage, you can get a renting something. When they check credit score, you can get a good credit history. Not difficult, not difficult at all. Any other questions? Any other question about credit card industry or anything you guys want to know? Where is
Someone asked in the chat, what was it like transitioning into business from out of the country?
yeah, you meant like for my case, I came to US back in 2000 as an immigrant. Is that your question? Like from from other country back to this work? Is that your question? Okay, great. So yeah, it's a interesting journey. I came here for graduate study. So I don't have all my family back in China. So I think it's not easy, but it's fun because you know a lot of people. So my first job is actually with Verizon FICO, the first slide I show you there. Because I study econ as I mentioned, and I'm interested in data and math, and I'm very passionate about it. So I apply for my job. Not easy, and my English is not my first language, so a lot of things I need to learn. But if you like learning with open-minded, I think it's not hard. I think that this I enjoy. It's not easy journey, but I think every day I learn something different. And so getting to the first job, even you guys who grew up here and born here, first job is not easy. That's why I highly recommend you have an internship, because that's the way you can test whether you're interested in this business or not. Because sometimes you may not. You may think you're interested in data, but you're totally not. And a lot of people, when they go through, and also company culture is important. I can tell you my company, Synchrony Financial, is a wonderful company. It's a family oriented. They are very diversified, and they encourage women leadership. Our previous former CEO, Margaret King, is a female leader, CEO. And I think that's why I think it's they promoting a lot of female leaders. That's really really great. I'm very grateful that I have a lot of great manager and boss, and the company culture is always very nice. And so not only I can leverage what I learned from school, but I also have a really nice company culture is also important.
Awesome. Thank you so much for teaching us and taking time out of your busy day. I think we all greatly appreciate learning these skills, especially before we're going into college and we'll be applying for credit cards. So thank you again. That was amazing.
And hopefully when you get to college, you guys want to apply internship, contact us, Career Center. I'm part of the helping there also. So we have a couple of girls also already in the internship. And one of them also got an offer from our company, Synchrony Financial.
That's amazing. Thank you
Yeah,
so much. Have a great
no
night.
problem. Good luck, everyone. Have a good
Bye.
night. Bye.
You.